Hello folks, in this video we're going to take a look at how the Fibonacci Clusters tool in eWavesHarmonics might be used to support trading decisions for entries and target prices with harmonic patterns. A couple of weeks ago I sent an email to my subscribers asking them if this is something they would like to see, and if so, what their favourite pattern was. Well, I had quite a few replies with a number of different patterns has been the #1 favourite. It was quite a close call overall, but the probably the favourite by a small margin was the butterfly pattern. So that's what we're going to use as an example in this video. Before we look at some real life examples of butterfly patterns, let's just have a recap on the theory of them. If you're already an expert on the patterns, you can skip through this bit. I'm going to use the scripts that I've written to extract the pattern details from the CSV file. I've created a duplicate one now. I'll talk about that in a second. So I know I've got it stored as pattern number 5. So this is what the pattern looks like. Let's just take the bearish one for now. So imagine, if you will, that prices come in like so. And then we get the first leg, the XA leg. Now there's no constraints about what the size is on that one. It can be anything, but that's a bit of an impulsive corrective move, if you like. And then the AB leg retraces 78.6% of that XA leg, like so, 0.786. And then from the B point, the BC leg retraces between 38.2% or 88.6% of the AB leg. Now, there's some people that will look for 38.2 or 88.6. The default in the CSV file, which I should be able to show you, is so it's 38.2 for the minimum AC to AB ratio and maximum of 88.6. So we've got a range. I've created 2 other patterns which uses one or the other. So I've created a butterfly 1 which only uses 38.2% and a butterfly 2 which only uses 88.6. So there's some logic that if it does retrace the 38.2% there, we are looking for the CD leg, this one here, to be a 1618 extension. If it's 88.6, we'll look for it to be a 2618. So again, I've got a range from 161 to 261, but you have the option of limiting it to just one or the other based on this percentage here. Let me close that for now. So once prices got to here, we're looking at for price to continue down in that direction. Now we have these areas where we've got these ratios. You end up with basically ranges where the price could retrace to. So if we take, for example, from there to there, when we're using 38.2 to 88.6, that's between there and there. So that C point could be anywhere within this range here. Oop. And likewise up here you've got 1270, 1618. So you're going to have something that's up there. So the critical thing about the butterfly pattern is getting this 78.6% retrace of the XA leg for the B point. And then of course you want to keep these constraints here. If it ends up being different Fibonacci ratios, you're going to be looking at a different pattern. In eWavesHarmonics, we'll calculate what's known as a potential reversal zone up here using these different ratios combined So we're going to get some Fibonacci levels in here where we'll be looking for price to reverse. That's shown quite well with the harmonic index, less so with eWavesHarmonics, but I'll explain that one. We do get a stop loss showing on eWavesHarmonics. We'll have a look at an example with the harmonic index in a bit. So this pattern is often seen at the end of an impulsive wave. So it could be the end of a wave 5, the end of a wave 3, or it could be the end of a wave C in an ABC correction. Let's now look for some real butterfly patterns. Just incidentally, if you want to see the definitions of all the patterns, you can click on that and you can just scroll through and see all the patterns defined there. And all these are defined in the CSV files. There's the strict one and the looser version as well. One thing I should point out before we get going is I have made a slight change to eWavesHarmonics with this demonstration in mind, really. There's a new field in the harmonic settings called use bar extremes only, and I've set this to true. So why have I done that? Well, the way the program looks for patterns at the moment is it uses the wicks and will judge a pattern to be fair if any of that area within the wick falls within the parameters defined in the CSV file for the pattern. What I wanted to do here was get a little bit stricter so that we are only using wick to wick, and I'm not using this area within here. That has the advantage of eliminating some of the uglier looking patterns which you might look at and say, well, there's no way that that's a bat because the D point's gone below the X point, for example, because we've used that wick. Well, that wouldn't happen by only using the wick highs and lows. Right, so with all that in mind, let's scan for some patterns. So I'm going to put it into test mode, go back to the beginning, switch on the harmonics, and we're going to search for the butterfly pattern. I'm just going to go for the regular one. I'm not going to go for the one where we alternate the different versions as we discussed earlier, whether it's 382 or 886 retracement. Let's just keep it within the range. We should find a few more patterns that way and begin the search until we find one. Now this is a fairly reasonable looking butterfly pattern, and let's just go out a bit. As you can see, it failed in that case, but is there anything we could have done to help us to avoid trading it? And the answer is yes, because we would use the clusters feature. Typically, if you think a butterfly pattern is lining up, you would start to do your projections from the C point, which was here, and that's a good place for us to do some auto clusters, which I'm going to demonstrate now. This has been revised a little bit, so it does some of the thinking for you, but you might still say, well, there's too many swing points taken there. I'm just going to reduce the number a little bit, and likewise there. Now you can see we've got some clusters. There's one all the way down here, and up here, up here, up here. So let's just see how the butterfly pattern goes exactly to that cluster. So now if at this point you thought we were going to get a butterfly pattern, you could have gone long around here with the target or the PRZ of that butterfly in mind, which is also confluence with the target zone 2, the eWavesHarmonics plots here, that would have given you a nice trade up. But now, would you have wanted to short it? Bearing in mind we've got quite a range for that D point up to 261.8, so we've got a stop loss up here, and the next cluster is all the way up here. This itself wouldn't have been a bad option for a short, because we're inside this area here. So we've got our supply zone there, that's nice. But let's just see what happened. It came down, broke all the way up, went up to our next cluster, and then it came down, bounced on the cluster there before going even higher. Let's scan through and find the next patterns. And we've got one here. So we're going to repeat the same exercise, although we don't have much in the way of swings within that CD leg there. But let's just put the test line onto the C point, do some auto clusters, and see what we've got. So we've got, if we were projecting from the C point to the D, we've got a cluster all the way up there, which would take it out, probably outside of the butterfly pattern definition, but we do have a supply zone up here, which is where that cluster is. Our stop loss is just above here. So if it, like I say, if we were just looking at that C, that we could take a long, it probably needs to go down to the 15-minute time zone or 5-minute to trade this one to get up there. But let's have a look. So by the time the D point was formed there, if we were looking to short it at that point, we'll do some new clusters. And we can see we've got TP1, TP2, TP3, TP4, so we've got some cluster alignment with the TPs down here going all the way down to the bottom, down to the demand zone. Our stop loss is just above there, clusters there. Really, you'd want to put your stop loss above those clusters, I would suggest. But let's just see how that pans out. Stop loss held. Came down to the cluster here and the TP3, and all the way down to the lower clusters and our demand zone, which it eventually broke out of. So you can see how the clusters worked quite nicely for holding the price as it went on its way down. So that was quite a nice example. It's just a shame we didn't have many swings within the CD leg there. Let's find the next pattern. And we've got that one there, so let's get rid of the old clusters again, and we will treat it again as if we'd identified the pattern here, the C, and we're looking for to see if we can get some projection down to there. And we would have done indeed, because we've got a cluster just there that you can see. So from the retracement here, we could have shorted with the stop loss just above there, looking to get that butterfly projection. Very nice. And let's see how it would have worked for the target prices going back up. Alright, let's take it from the end here. It's still a valid butterfly pattern. Get rid of the old ones. So we've got TP1 here, TP2 here, not much in the way of clusters. We've got that cluster in the way there. Our stop loss is all the way down there without a great deal of support. This is one of those cases where you may need to zoom out a bit. Let's repeat that with a zoom out. There we go. So stops down here with these clusters, supported by the default stop loss for the butterfly pattern. target price 1, 2, 3. So we've got various clusters that are going to be in the way, but could also act as price magnets for us on the way back up. And our stop loss has been safe all the way, and price did go up eventually just about to the TP3. We've got this cluster held price here. And that's pretty much as it went. Okay, let's find some more. Get rid of the old ones. Here's found another one there. That was a bit on the small side for us, but let's skip that and look for some more. And here's another one. And that one looks like it's already failed, but let's have a look and see how it would have worked out. We will put our test line on the C points again, and let's see if we can project down to the D point for the pattern. Oh, wrong one. So we can see we've got a cluster down here. Automatically plotted target zone 2. This is target zone 1 here. Price normally bounces there, but we've got a good projection down, I would say, for the butterfly there. And we can see that price came down very nicely. So had you sold here with a stop loss just above some clusters here, you would have done quite well with that. Now you can see price has already broken through, so we wouldn't be, if we were looking to go long here. Oh, we've still got a valid butterfly there. It's no longer valid. You could have been looking to go long here with your stop loss on that cluster, but now we have a stop loss here and a cluster down here. We can redraw our clusters and see if there's something that's tradable. Get rid of the old ones. The only problem we've got with this is there's not really much of the way of an uptrend. So on this, I'm just going to do the auto bearish to look for retracement clusters. So had we got along here, we've got target here, here, and up here. Maybe a bit further if we want to push our luck. Let's just see how that worked out. That cluster held price. So not a great deal in that one. Let's see if we can find something better. Alright, scan for the next one. That looks quite good. Let's see how this works out. So again, we will put our test line on the C points and see if we get a nice projection down for our butterfly pattern. Interesting to note here, we've got target zone 1 there. So if we were at that point there, we would be looking at target zone 1 anyway. So that looks good to short for a butterfly. Let's see what we get in the way of clusters. We've got some clusters here which would support our stop loss, and we've got a couple of clusters just here which would support our target. So a short there with a stop just above there would be perfect, as it worked out. Lovely, lovely, lovely. Now for our target price, so as price came down here, we've got some clusters here, one just up by the target price 1, but we've got a cluster all the way down here in target zone 2 here. So we would have some reservation, I would suggest. Our stop loss is there for the butterfly. If you're going to try a long, you might want to bear in mind that you've got this area here with the cluster. Let's see how that works out. And price came down, didn't quite get to our cluster. So of course once it's done that, you would adjust your clusters anyway to see if you can get a revised target. We've done quite a lot of examples on the cable hourly now, so let's have a look at a daily euro dollar, and this was the first butterfly pattern that I came across back on 4th of January 2018 if you want to check it out for yourself. But this time we're going to use the harmonic indie to get some of the details of the pattern, but primarily of course we still want to look at the clusters. So I'm going to take, we know we've got a pattern there, but I'm going to take it off for now, and I'm going to use the harmonic indie to draw a pattern for us. Now, the nice thing about the harmonic indie is that we have the D Pro feature, or we have the XA Go feature, which will project patterns for us. So I've just done, let's do that a bit better, shall we? I'll put some notional values in here, and we're going to do the D Pro. We're going to draw it first. So it's picked up a Gartley, but let's see what options we have on the using D Pro, and you can see here that is projected up for a butterfly pattern. You can see that. So again, what we're going to do is pretend, for the purposes of this exercise, that we've only got to the C point. Let's just zoom in a little bit for you. And okay, so if we were at this point in time on the 13th of February 2017, we may have done a retrace here, and we can see that we've retraced to the nearly to the 78.6%, not quite all the way to the 88.6% there. And let's just clear that, and then that, and then this here has retraced 61.8%. So we might say to ourselves that the C looks like we're going to get butterfly pattern, and we've done a projection up to the C there, for the D for the butterfly. So let's zoom out, and again let's pretend that we haven't seen all this information that's going up here, and let's just clear that off for now, and clean off the other stuff. Okay, so we are here, aren't we? Let's do our clusters. So what have we got? We have target zone 1 automatically plotted up here, and we've got a cluster just up there and clusters here. So by all accounts, but according to our values, we would reasonably expect a butterfly pattern to get to at least up to here, or the price will get up to here to hopefully give us that butterfly pattern. And we can step forward a bit and then see how price reacted. So you can see we got to the cluster, and have we got a pattern here? We have. There's our butterfly, as we expected. In my experience, target zone 1 that's automatically plotted by eWavesHarmonics is very reliable as a target, and dare I say it's probably more reliable than projecting a butterfly pattern, but I've got absolutely no stats on that. It's just my theory. So now we've got that, I wanted to show how the PRZ works. So I'm going to take that off now. We're going to draw our pattern using the harmonic indie. Let's just make sure we got the magnet on. And we'll draw. There's a butterfly. Let's show the PRZ box, and there's our PRZ box. So that's the price level where we would reasonably expect a reversal. Obviously in this case it went up higher. Let's just put the leg data on so you can, not the leg data, the data values, So you can see the values of the retracement, how the harmonic and indeed eWavesHarmonics calculates these patterns. So when we got to that D point, if we were looking to short it again, we would just redraw the clusters. There's auto. And how many have we got? Just a couple there. Let's put that up, that's fine. And yep, that's good. So if we were going to short at that point, obviously your stop loss would be just above the PRZ normally, and would be targeting down here. We got this, but the targets, and we've got the SL there. So target price 3, if we were shorting there, aligns really nicely to that cluster, as does target price 4. But to be on the safe side, you're going to be looking at your stop up here, I would suggest. Let's see how price then works out. Well, our stop, if it was all the way up here, would be quite safe. Once price had broken down, you'd probably be looking at trading your stop down a bit here anyway to cut your risk. But it came down to the target price 2 and then target price 4. So you see how the target price is supported by the clusters. There you go, just the clusters on their own work very nicely. That's pretty much it, I think. There's a few things that are worth pointing out. Is that eWavesHarmonics works very nice with harmonic patterns where you do have an extension, i.e. the D goes beyond the X. Obviously some patterns retrace within the X. With the butterfly it goes beyond, because ultimately you're looking for divergence. In this case we use the awesome oscillator to get that diversion. Unfortunately in this case it went higher for us, and I think we lost some of that divergence there. Just about touched it. So it is diverged basically because price has gone a lot higher than there, but the histogram hasn't. So this is where eWavesHarmonics works very nicely to support your trading decisions for the patterns. And as we discussed earlier, the target zone 1 that we see up here often acts as a much better target than perhaps the butterfly projection might do. So we'll just finish this longer than I anticipated video with a nice little example of a butterfly pattern working out just fine on Euro-Dollar M15 with our stop up there and our automatically drawn clusters. We could have traded all the way down to the bottom here, which would have given a very nice risk to reward. So just a quick recap that butterfly patterns, along with some of the other patterns where the D extends beyond the X, work very nicely with eWavesHarmonics and divergence. The clusters can help you project the D point once you've identified a C and you think a pattern is forming. It can help you with your stop losses, and it can certainly help you, as you can see, with your target prices. I hope that was helpful in some way. Happy pipping.